Hello everyone, it's your boy Mayor the Pips Coda. Welcome back to this channel. Today's video we are going to talk about the quotes, reading the quotes, ask and beat prices, spread, pip and fractional pips, understanding the market orders, risk management in details. Lastly, personal assessment. But due to time limitation, I won't cover all this. So let's proceed. We don't have much time. Reading the quotes. In our previous class, in our previous video, rather, we looked at the various currency pairs. It should be noted here that the first currency in a currency pair is called the base currency, while the second currency is called the quote currency. Also, the value of the base currency is expressed in the unit of the quote currency. For example, the Euro USD. The euro is the base currency, while the USD is the quote currency. A quote of the euro USD pair will indicate that 1 euro costs a certain amount of the US dollars. For instance, the euro USD is quoted at 1.41830. This means that euro equals to 1 euro equals to 1.41830 US dollar. The next one, we have the ask and bid prices. This is the price at which a forex trader can buy a currency pair. Bid price, this is the price at which a forex trader can sell a currency pair. On the mobile MT4, which is the MetaTrader 4 platform or MetaTrader 5, the bid prices are the prices on the left side of the currency code, while the ask prices are the prices on the right side of the currency code. The ask price is always higher than the bid price. As you can see it on this image, you can see where we have the bid price indicated and the ask price indicated. The bid price is at 1.1720, while the ask price is at 1.1721. So we move to the next one. What is spread? The next one we have there, the number third, we have there, what is spread? Spread is simply the difference between the ask price and the bid price. It is generally the fee paid to the forex broker for every deal opened on their platform. The forex broker platform is the MetaTrader 5 or the MetaTrader 4 you use in managing your trade, managing your position, managing your funds. So we proceed. What is a pip? A pip, short for point in percentage, is the smallest price change of a given exchange rate. It is the fourth digit after the decimal point for most pairs and the second digit after the decimal point for Japanese yen pairs and a few exotic pairs or commodities. Pip calculation. Here is an example to explain. If the euro USD pair moves from 1.1250 to 1. Please take note, this is 1.1251. That is a 1 pip movement. If the euro USD pair moves from 1.1250 to 1.1251, that is a 1 pip movement. Or say it moves from 1.2550 to 1.2650, that is a 70 pip movement. For a Japanese yen pair, if say the USD JPY quoted as 110.50, if it moves up by 5 pips, its quote will be 110.55. A 100 pip movement will see the USD JPY pair at 111.50. The next one is, what is fractional pips? Also known as pipettes, the fractional pip is an additional decimal place added by most trading platforms to increase precision. Sorry, I come again. What is fractional pips? Also known as pipettes. The fractional pip is an additional decimal place added by most trading platforms to increase precision. For example, the Euro USD will be quoted as 1.12510 or 1.12525, while the Japanese yen pairs like the USD JPY will be quoted as 1.0.520 or 110.568. So the last number is the pipette. The last number is the pipette, while the rest are pips. From let's say for example, you have the Euro USD as 1.1251. That's pips. And then when you add the last number, that's a pipette. So when you are calculating your pips, you keep the last number aside. When you're calculating your pips, when you want to calculate your pips, you keep the last number aside because that is a fractional pip. You do not need it. So we move to the next one. Types of Forex orders. Types of Forex orders. That's understanding market Forex. That's the number feet of what we are going to talk about today. Types of Forex orders. The term Forex order simply means how you will enter or exit a trade. In Forex trading, there are different types of market orders one can open depending on your strategy, risk appetite, and trading style. They include 1. Market instant orders. A market order can either be a buy or sell order that allows a trader to open a position on any given asset at the current market price. On the MT4 or MT5 mobile platform, it is shown at the bottom of the new order interface. So this type of order is called instant execution. So when to use the market instant order? Market orders are best used when you see a trading opportunity that needs you to act quickly. Click buy, sell at market, and you are in the trade instantly. That's for market execution, when to use it. For example, the bid price for AUD USD is currently at 0.7228 and the ask price is at 0.7230. If you wanted to go long, that is buy AUD USD at market price, then you would be entered at the ask price of 0.7230. You would click buy and your broker would instantly execute a buy order at that exact price. Small differences might occur due to price variation. The next one is pending stop orders. A pending stop order can either be a buy stop or a sell stop order. A buy stop order is used to buy above the current market price, while a sell stop order is used to sell below the current market price. When to use pending stop orders? This is best used for trading breakout or trend continuation strategies, where based on your analysis, you expect the market to continue going in its predominant trend or direction. For example, Euro USD is currently trading at 1.1230 and is trending upward. You believe that price will continue to go up and actually break out of a resistance level at 1.1300. Instead of sitting in front of your screen or in front of your computer and hitting buy at market, possibly missing your perfect entry price, set a buy stop order at 0.7300. Once price gets to this level at 0.7300, your buy trade will open automatically. Let's say for example, let's use another example. Let's say you at the current market price of Euro USD, we have 1.1230, and then you want to set a buy stop order. A buy stop order should be above your current market price. That is, you can set it at 1.1235 or 1.1240. That is above the current market price. When to use? That is still under when to use. This is a clear example. This is just like your trading screen. This is best used for trading breakout or trend continuation strategy. I have already talked about that. So this is the picture. For example, now the current market price is ranging between 1.1248 and 1.1200. So if you are setting a buy stop, you should set it above 1.1248. Or if you are setting a sell stop, you set it below 1.1200. So that is it. This is a clear example. This is a clear image that is telling you how to set a stop order. So we proceed. 3. Pending limit orders. A pending limit order can either be a buy limit or sell limit. Note, we have buy stop, sell stop, or buy limit or sell limit. Those are still pending orders. So a buy limit order is an order used to buy below the current market price, while a sell limit is an order used to sell above the current market price. Limit orders are best used for trading reversals. Based on your analysis, you expect that price will reverse when it hits a certain price, level below or above the current market price. For example, Euro USD is currently trading at 1.11230. Forget that's it. I'm not adding the pipette. That pipette, don't be confused. The last number is the pipette. So the original pips is 1.1123. So the last number is the pipette. So don't be confused. And your analysis tells you that resistance at 0.7300 will likely hold. That's to say, when Euro USD is selling, when Euro USD is at 1.11230, that's 1.1123, and then it is selling down to 0.7300, and then you believe that a resistance will hold. This resistance of 0.7300 will hold this price that is trading down to that resistance. You believe that it will hold, and that is where you set your buy limit. So the next one is how to set stop loss and take profits. For any buy trade, your stop loss price level must be lower than your order, and its take profit must be higher than the entry price, as higher than the order, as in any buy trade you are having. Now let's go back to this picture. Let's go back to this image. Now we have a buy order here. Your stop loss, which is your SL, must be below this buy limit. And then your take profit must be above the buy limit. So that's it. And then same thing applies to sell order. Your stop loss price level must be higher than your order entry price, and its take profit must be lower than the entry price. So when you come to this image again, look at your sell limit. Your stop loss will be above this sell limit, while your take profit will be below the sell limit. So that's it. I hope you understand. I need to move forward. I do not have much time. So the number 4 is stop loss, SL, and take profit, or you call it TP. Stop loss or take profit are orders used to exit the market. Stop loss or stops is defined as an order that you tell or send to your broker, telling them to limit the losses on an open position or trade when the market goes against you. Now, for instance, you have $100 in your wallet or in your trading platform, which is the MetaTrader 5, MetaTrader 4. This MetaTrader 5 are connected to your brokers. These are the software produced by the brokers for the help of managing your capital, you're managing your position, executing your trade at any time. So they are always 247 active to do whatever thing you ask them to do. Now, let's say for instance you open a trade and then you set a stop loss. That stop loss now means you have $100 account and you wish to reach 1% of that $100. So you are going to set your stop loss at 1% of $100. You are not going to that means if the price come or if the price goes against you, that is not going your way, is coming to take you out. The market, maybe your analysis is not right, and the market is coming to take your stop loss. Market, you are being in loss, and then market is coming to take your stop loss. You are not going to lose more than 1% of that $100 in your account. Let's say for instance you step out, or you are sleeping, or you have something that is taking your time. You do not have time to go to your chart to close your trade manually. The broker will help you close this trade once that price get to your stop loss. The same thing applied to the take profit. Once price get to your take profit, the broker will help you take your profit from that point and add it to your balance. So that's it. Take profit or target price is an order that you tell or send to your broker, informing them to close your position or trade when price reaches a specified price level in profit. So that's as simple as that. Further note on stop loss or and take profit. Stop loss SL. What this means is that while opening your trade or after it's been opened, you can set your SL and leave the chart just as I have explained. If the trade goes against your position or it goes against your analysis, it would close automatically in a loss. Since you are not there to close it manually, it will close automatically in a loss once it gets to your SL. That's your SL price level. Take profit, the same thing. While opening your trade or after it's been opened, you can set your TP and leave the chart. If the trade goes in your favor, it will close automatically in profit once it gets to your TP price level. We proceed. Same for that note. For any buy trade, your stop loss price level must be lower, like I have explained on that picture, that lower than your order price, and its take profit must be higher than the entry price. In the same way, or in the same vein, for any sell order, your stop loss price level must be higher than your order entry price, and its take profit must be lower than the entry price. While setting your market orders, the stop loss is always at the left column, while the take profit is at the right column, or on your MetaTrader 5 or MetaTrader 4 platform. That is when you are trying to modify your trade. Let's say for instance you take and you execute your market instantly, like we talk about the instant pending stop, pending limit. So you execute your market instantly, and then you want to set a stop loss and your take profit. You modify it, you see them on the screen. The stop loss is by the left side, the take profit is by the right side. So the next one is the risk management in details. So this is where I'm going to stop. So, and I will continue from here in the next video. So thanks for watching. Please like and share, comment, and also if you have a question to ask, please drop it on the comment section. Please do not forget to subscribe to my channel for me to be able to be dropping more videos like this. When you subscribe, it motivates me to drop more video like this. So thanks for watching once again. I will stop here due to time limitation, and then I will continue from here in my next video. In the next video I will be posting, I'll continue from here. So after the risk management, we have personal assessment and others. So thanks for watching. Peace out.